Hello, welcome to the European Open briefing for Thursday, April the 20th. I'm Rafi Barajan, currency analyst at XM.com, and we're going to be having a look at the latest developments in the currency markets today. So we're seeing some improved risk sentiment this morning following the release of strong data out of Japan and New Zealand. The dollar is rather flat, however, as its gains are being capped by geopolitical concerns, although there was some support from slightly more upbeat comments from the Fed's Beige Book, which assesses the US economic activity. The New Zealand dollar is one of the better performing currencies. It's back near 3-week highs after strong inflation data out of New Zealand. And we're seeing a bit of a rebound in oil. Yesterday, oil prices slumped by almost 4% following the US inventory data. And in European currencies, the euro is extending its gains, and the pound is holding above it's currently trading around the $1.28 dollar level. And yesterday, of course, we had that vote in the UK Parliament where MPs overwhelmingly voted in favor of holding a snap election on June the 8th. But let's start with the US dollar. We can see here that the dollar has been mostly flat after that rebound we saw early yesterday. It's currently trading around 108.80 against the Japanese yen. We've of course have the ongoing geopolitical tensions concerning North Korea, and also the recent US data has been weighing down on the dollar, as it's been rather mixed, suggesting that first quarter growth will be not so strong. But there was some support coming from the Richmond Fed's Beige Book, which assesses economic activity in 12 US regions. It said that the US economy grew at a modest to moderate pace during late February to March. But the dollar did move higher after it said that some signs of labor market shortages in certain sectors that suggested that the US labor market is indeed tightening, although for the time being wage growth remains moderate. Overall inflationary pressures remain modest and consumer spending is flat, and that's been one of the factors actually weighing on the dollar, that consumer spending hasn't been as strong as consumer surveys have been indicating. The US yields on 10-year Treasury notes did move higher. They jumped away from 5-month lows after the Beige Book, so there's been some support coming from the Beige Book, although the dollar didn't really react as strongly as you would have expected on that increase in the US 10-year Treasury yields. Moving now on to the Australian and New Zealand dollars, the two currencies are benefiting from the improved risk appetite. That's after the Japanese exports rose by more than expected in March, suggesting that the Japanese economy continues to grow strongly. In 2017, exports were up by 12% on an annual basis, beating estimates of 6.7%, and they're now rising at the fastest in over 2 years. Imports were also higher by more than expected. We also had strong inflation data out of New Zealand. In the first quarter, New Zealand inflation rose by 2.2%. That's up from the prior quarter's 1.3%, and expectations of 2%. And also core inflation was, even though it was steady at 1.5%, that's still within the RBNZ's target band. So it does indicate that the RBNZ is unlikely to cut. It's most likely done now with rate cuts, and that helped the Kiwi rise to near 3-week highs of around 0.7050 against the US dollar. The Aussie is up by to a lesser extent. And also, it's worth mentioning that despite the strong New Zealand data, that was some analysts say that that was down to temporary factors. But for now, the Kiwi is up on that data. Moving on to oil prices, we can see there was a big drop yesterday after the US inventory data that showed US output continues to rise. Also, US stocks, although they did fall, crude stocks they were actually down by less than expected, and gasoline stocks they were actually up sharply according to the latest EIA data. But this morning they were given a bit of a lift by comments coming out of Kuwait and Saudi Arabia. Their oil ministers gave the strongest indication yet that the current output deal will be extended beyond June. OPEC and some non-OPEC countries will meet on May 25 to discuss extending the deal. But yesterday's drop in oil prices did actually push USDCAD to 1 month's high of 1.3491, and we can see that despite the rebound, it's actually a very modest rebound given the big drop that we had. In European currencies, you can see the euro and the pound are mostly moving together against the US dollar. The euro is actually doing rather well this morning. It hit a fresh 3-week high of 1.7470. The latest French polls continues to indicate a four-way race between Macron, Le Pen, Fillon, and Mélenchon, with Macron and Le Pen most likely to get through to the second round. Although, given the huge number of undecided voters, a surprise shouldn't be discounted, but the euro doesn't seem to be too affected by the polls. It's actually, although it is benefiting from the weaker dollar for now, it appears to be in demand. The pound is also in demand. It's back above the 1.28 level. Yesterday we had the vote in UK Parliament where overwhelmingly MPs did approve Theresa May's call for a snap election on June the 8th, and so now the pound is above the 200-day moving average, because the elections that May will probably win with an increased majority. That means that there's less of a risk of a hard Brexit, because a bigger majority will give May the mandate to follow her own agenda with elections and possibly be more willing to make compromises to the EU in the negotiations in order to maintain as close contact trade ties in terms of trade ties with the EU. Now, a quick look at today's economic calendar. We can see the New Zealand inflation data and Japanese export data, trade data out early today. We had German producer prices, which actually were rather disappointing. Producer prices were flat in March. In the US session later, the main focus will be the weekly jobless claims, although we also have the flash consumer confidence data out of the Eurozone. And in terms of speakers, we're going to have the Bank of England Governor Mark Carney speaking at an event in Washington, and he will be followed by the US Treasury Secretary Steven Mnuchin. So that will probably be more closely watched, given that he may given his recent comments on the strength of the US dollar, as well as on the likely timing of the tax reforms. That's it from me. Thank you very much for watching, and have a great day.